Hello, I'm Lelde Smits from Modern Wall Street. Joining me here on the floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, welcome again.
The pleasure, as always, is all mine.
Now, it's a huge day. It's all about monetary policy, really. We've had the ECB just announce stimulus measures, but disappointing. The market now plunging even further into the red. What's your take?
You know, what we're seeing here, we're seeing the dollar-euro trade unwind in front of our eyes. Yes, Mario Draghi gave us some extra stimulus, but it wasn't exactly what they were looking for. He didn't put muscles on the month-to-month purchases, which is what I think most of Europe was looking for. They didn't quite get it. They got a lot of other stuff. They got an interest rate cut. They got an extension, but they didn't get what they wanted. And we're seeing the result now.
Okay, closer to Wall Street, we've got these fairy lights twinkling. Christmas is here, but that, of course, means an interest rate decision coming up. Yellen making 2 appearances in 2 days. What have you taken from what she's said, and how has that changed your forecast?
Yeah, actually, she made 3 appearances in 2 days because she spoke twice yesterday. She's clearly a little afraid of inflation. I mean, she's using terms that are scaring people, like overshooting our goals and abrupt interest rate hikes down the road, which, even if she's just using them in a cautionary way, people are hearing something that scares them a little bit. So you're seeing a sell-off, like I said, in the dollar trade. You're seeing a sell-off in U.S. bonds, and in global bonds, really. And you're seeing a sell-off in equities pretty much everywhere that's been open since the ECB meeting this morning has been selling off pretty hard.
And what do you think's really pushing those falls even further now as we enter the afternoon?
Well, you know, we had a couple of support levels break today. So on top of all the fundamental reasons and the reasons, the monetary-based reasons, there's just been a technical reason to get out of some positions. So it's a broad-based sell-off. You're seeing red in almost every sector. There's almost no place to hide. I mean, if you need to hide, I mean, I've been pushing Infotech as a place to hide because it's been a pretty consistent performer over the last year or so. You're not really safe there, but it seems like it's a little more consistent. And maybe, if there's a push towards the end of the year, you might get it there.
And which tech stocks, could you mention even a few that might be catching your eye?
Well, you know, I mean, I do have small positions in Intel and Oracle. Not that I'm pushing them at all, but I'll tell you what I do. I don't give you advice.
Absolutely. And finally, I mean, as you've said, everything is in the red today. Yesterday, we had the price of oil fall under $40. What is your outlook for that ahead of the OPEC meeting this week? What are you expecting will come out of the meeting?
Yeah, so that's one of the reasons, on top of Janet Yellen, that we sold off yesterday was the dramatic sell-off that you saw in West Texas crude and all the energy stocks as well. So this OPEC meeting, it seems like it's already out, that they're not going to cut production, that we're going to retest this $40 level that we've been testing for quite some time now. If you get a crack in that level, you probably go to 38. If you don't get a crack in that level, then maybe you get a short squeeze, and it's a good thing for everybody. But if you do get a crack at 38, then we're playing the children's game of chutes and ladders. Then we're going to go a little while.
Okay, and of course we've got the jobs data coming out tomorrow morning. A very busy week ahead. What are you looking for, just quickly, for those numbers tomorrow? How will it impact trade over the coming week?
I sure hope we don't get like a 140 number tomorrow. We're expecting 190 to 200. If you get anything close to that, it's going to keep Janet Yellen and her gang on track, which it seems like they certainly do want to raise the Fed funds rate in 2 weeks. It's the cat's well out of the bag at this point. They're all speaking kind of in unison. Even some of the doves are kind of like either backing down or not talking at all at this point. And Janet seems on board. So if you get that, I think we're on track. Next week is a light week macro-wise. As heavy as this week was, next week you really only have retail sales on Friday. So Friday has to count this week.
Okay, well, I know we've got a lot happening in the market right now as well, so I'll let you get back to it. But thank you again for your insights today, Stephen.
Thank you, Lelde.